Good evening and happy Friday. This is Shana from the Trade Exchange. I want to get right into it with you because it's been a busy week, and it's not just because it's earnings season. We started off the week with the announcement that Anthony Scaramucci, the White House Communications Director, was fired from the White House after being in office for just 10 days. Following that, we find out that Russia put sanctions against the United States. Well, why? Because the United States put sanctions against Russia. And our US dollar had weakness. It actually hit year lows this week. But what's interesting, and this is why I'm talking about all this, is I want to show you the S&P 500 because we speak so much about the VIX, and I could explain about how we have this low volatility. But here is more evidence besides just looking at the VIX to show you exactly what we've been discussing. So the VIX, you can see here, has moved less than 10 points this week, and that's considering the turmoil in the White House, so considering the sanctions from Russia, the threats coming from North Korea, and still the S&P 500 has fluctuated less than 10 points. What's even more interesting is over the past 12 consecutive days, the S&P 500 has moved less than spot 3% up or down, and that's a record for the S&P 500. So again, this is just more evidence, besides just looking at the low VIX that we're seeing week after week, of what little volatility we have, even in such a tumultuous political atmosphere, both in our domestic country and also with our international communities. But we're in earnings season, so let's discuss earnings very quickly. Starting off with Teva. So this is very interesting because Teva, as you see here, dropped dramatically this week. Their stock is actually down over 30%. So for our subscribers who are watching this, you may have seen this come across your news desk this week. And this was some unusual option activity we saw in Teva. And this option activity we saw on the day that earnings were released prior to the earnings, because earnings were released after the close. So the day that earnings were released, we saw this unusual put option activity with the August 30.5 puts, and they were trading at 40 cents on the offer. So that's a very bearish play. But following that evening, they had the earnings release, and it wasn't good earnings. It wasn't good revenue release, and we find out that this contract was actually trading above $6 the next day. So whoever was involved in that did phenomenal. But back to Teva, because what happened with Teva? Well, yes, again, they missed on earnings. Their earnings expectation was $1.06. They came in at $1.02. And their revenue expectation was $572, and they came in at $5.69 billion. So, yes, they missed on both of these, but what else accounted for such a large drop in the stock price? Well, not only did they miss on earnings and revenue, but they also cut their dividend by 75%, and they also cut guidance. Following that, they were downgraded by Oppenheimer, by Cowen, by RBC, by Credit Suisse, and then Fitch cuts the rating to triple B minus and switches their outlook to negative. So Teva had a very awful week, and again, it closed down actually over 32% this week, closing out at 20.60. But on a positive note, one of my more favorite companies to speak about is Apple. Apple did the exact opposite. Apple did phenomenal. Apple beat earnings and they beat revenue. Their earnings expectation were $1.57. They came in at $1.67. Their revenue expectations were $44.9 billion. They came in at $45.41 billion. And they opened up the next day 6% higher. But the real fun part about all this is the Dow. Apple is a huge component of the Dow Jones. And the next morning, the Dow Jones opened above 22,000, which is a record high for Dow Jones. So Apple had a great week, and they've had great price target raises. Guggenheim has them at 190, and Piper also has a price target of 190, among many other financial institutions that also have raised their price targets for Apple. So Apple did great this week, closing out the week at 156.39. And on a broader perspective, taking a look at crude oil. So you remember last week, crude oil was on a nice, great rally. Well, technical analysts we said we had spoken to had mentioned that this rally could have been nearing an end. And on Monday and Tuesday, we passed the $50 a barrel level. But again, we have dropped. And oil is actually down for the week, spot 54%. And this is on renewed concerns that are these OPEC nations going to sustain the production cuts that they keep speaking about? So an important date to remember is there's going to be a meeting. It's going to be on August 7th and August 8th. And this is a time for this group to get together of these OPEC nations and to renew their commitment and say that they are going to sustain these production cuts. So very important meeting to pay attention to. They closed down spot 54%. The EIA data this week was great. The API data was great this week. And the Baker Hughes numbers came out, and the U.S. has actually finally cut back this week. The U.S. total rig count is down 4 to 954 this week, and the oil rig count is down 1 to 765. So again, oil closing out at 49, spot 53 this week, down spot 54% for the week. Last but not least, let's take a look at the indices. The Dow closed out up 1.2% for the week, closing out 22,092. S&P's closed up 0.16% this week, closing out 2475. The Nasdaq closed down 0.36% this week at 6351. And gold closed out 1258, 0.28, closing down 0.86%. And again, you see the low volatility with our VIX right there, closing out the week at 10.03. I want to thank you all for joining me. I look forward to joining you next week, and I wish you all a wonderful weekend. Thank you so much. Bye-bye.